Yo, yo, welcome to the show.
Yo YouTube, what is good? Welcome back to the channel. If you are here, you know it's June 16th, and that means we are talking about what we plan to be buying in the upcoming week inside the Robinhood portfolio, the taxable account. Usually we pick a couple stocks or ETFs based on them being down or based on their ex-dividend dates or based on us possibly starting a new position or based on us just wanting to buy into that stock or that company, just whatever the stock or the ETF, whatever the situation is, I just talk about it. So if you're interested in that, you can always join and see the videos that are released each and every Sunday. I've been pretty consistent about that. So yeah, thanks for coming and thanks for coming back. In my taxable account, I usually make a deposit on Tuesday. In this case, I'll be depositing $165, and I make one deposit, but I usually split my buys up into 2 days. So one day is on Tuesday, where this week in this situation I'll be dropping $85 into some stocks and some ETFs, and then the remaining, the $88 that remains will be used on Thursday to buy stocks and ETFs. So that's how I usually do my thing: Tuesday, Thursday, and then my Roth IRA is like Monday, Wednesday, and Friday. So I'm literally buying something every day of the week, every day the stock market is open. So that's kind of cool, and I feel like I get the best of all worlds. Like the market might be up on one day, down on another. I feel like that's a good way of DCAing. I'm not super busy to the point where I cannot, find 5 minutes and click a couple buttons and buy some stocks or ETFs. So that's been working for me. It might not work for everyone. It's something that could easily be automated if there is some consistency or repetitiveness in it. But for me, I do like to switch up my buys from week to week. So it for me, it makes more sense to make this more of a hands-on situation. So for this week, Tuesday's investment, that's going to be June 18th. We're looking to buy Stag and Brunswick, and we can see Stag's our first one, Stag Industrial, ticker symbol STAG, are adding 0.75 of a share, so 3/4 of a share, 3/4 of a share. That's quite a decent amount, and that's going to take us to 11 shares total. After that, we're getting some Brunswick. And why are we getting Brunswick? Let's look at Brunswick's chart. We can see here Brunswick is trading for about $75. This is only a day chart, but let's look at the year to date for Brunswick. You can see it's quite down, like 22%, 21.5%. So I think it's a good opportunity to definitely buy some shares at a cheaper price in this position. It's definitely one that I am long term invested in, or I do believe in the position long term. So hey, it's one of those situations where a standalone company might be going down, but you just have to either decide to jump ship or do the best mathematical thing and DCA and buy the shares at a cheaper rate. They do also pay a dividend. I'm sure the more the stock falls is the higher this yield becomes. Right now it's sitting at 2.20%. We only have it's in my Roth right here. We only have how much do we have? Oh, there we go. We only have one share, and so buying the 0.25 of a share is going to take us to 1.25 shares, but we're down 11%. 11.6%, not even $10. But I think I want to pick up some more shares of Brunswick. And jumping over here to Seeking Alpha, we can scroll down a little bit to see the dividend scorecard, and just how Brunswick has been. They're just their general overall kind of stats. You can see their yields at 2.26%, so not quite the same as what Robinhood was showing us. Annual payout $1.68. Don't really care about that, but this is what's important. The payout ratio 21.4%. That's very nice. And then the 5-year growth rate at 14.87%. That's very nice to see. And then overall growth of it's been growing for 11 years in total. So that's very nice to see. I love seeing this. So I think that as a long-term dividend growth company, Brunswick is a good investment in the portfolio, and I think it helps to diversify. Like I always say, it is in the marine life, like fishers industry. I have nothing else that really covers that, so I think just buying now at these discounted prices, yeah, I will continue to do that. So jumping back into the PowerPoint, the next stock we have on our list for Tuesday is Microsoft, and you can also see we're buying some waste management but for now Microsoft, we're adding just zero point zero 0.04 of a share. And Microsoft is it's just a company that you always gotta buy because it will not wait for you. Microsoft was literally just at $400. Now it's trading again at like 440. I'm sure it's gonna be at 450 at some point soon. But buy the highs, buy the lows. Microsoft, I think in its industry, it's definitely one of the leaders and will continue to be one of the leaders. So with that addition of the zero point zero 0.04 of a share, it's not even a lot, but Microsoft's so expensive where 0.04 of a share it's a decent amount. That's going to take us to 1.4 shares in total. Waste management, similar idea. It's one of the leaders in its industry. Not really buying based off an ex-dividend date or like a drop in the share price. Just like, hey, I want to own more of this company, so I'm just buying a little bit right now. This addition of the 0.09 shares will take us to 0.9 shares in total. So right now we have 0.81 of a share, and this is going to take us to 0.9 flat shares. So with these buys, our total for Tuesday is going to be $81, well, approximately $81.56. I've been getting lucky recently where this estimated total is like it's an overestimate, and I like that because I don't like how do I say? I don't like spending more than I planned to spend. So I like planning to spend and like end up spending less, if that makes sense. So that's been pretty nice lately. On Tuesday, those buys were Tuesday buys. These buys, June 20th, will be what we plan to buy on Thursday. So we're picking up some SPY, just 0.04 shares of SPY. Just like Microsoft, just like with waste management, SPY is just that ETF that you have to buy. Buy at its highs, buy at its lows, because you don't know which one is which. It's the US. It's a stock. It's a top 500 companies in the US stock market. If that ETF does bad, I mean, I think just like everyone says, you have bigger things to worry about than your investments. If the SPY is like if the SPY drops 50%, I guess, I don't know, but I just think that the fact that that's an umbrella of these, like the Microsoft, the Nvidias, the Apples, and even like the Home Depots and the Pfizers and these companies, so much diversity. I think that it's a solid ETF. Of course, you could be a little bit more conservative and more and broader and go VTI or something like the total stock market ETF. But for now, I like SPY. You could go VOO, which is cheaper than SPY, but I just like SPY. Okay, don't judge me. Adding 0.04 of a share takes us to 3.25 full shares. Next on our list is SCHD, the Schwab US Dividend Equity ETF. Focuses on dividend paying stocks that have a reputation of paying I don't know what their threshold is, but paying a good dividend and paying it consistently over a number of years. So I could be a little bit more detailed on that. Don't come from me, I don't know the details. But SCHD, love the dividends that come in every quarter from them. We will be getting paid this month from SCHD, where I will be talking about them in my dividend update, which should be coming around the end of this month. So definitely stay tuned to that. This addition of half a share will take us to 13.5 full shares of SCHD. Next on our list is Realty Income, which has their ex-div date on July 1st, ticker symbol O, adding 2.28 of a share, and that's going to give us 12 shares total. Realty Income has seen better days, And right now it's hovering around a comfortable 52, 53, maybe even like 54 range. And it's just because there's so much anticipation in the market in terms of interest rates. Like, is it gonna be? I don't think they're planning on raising it. Hopefully not. But is it gonna stay as is, like remain the same, or are they gonna lower it? As soon as the economy kind of calms down, based on the CPI reports, inflation, and all that, I just like the general consensus is these REITs will start picking up more upward momentum. And it's kind of a crazy, because the trade-off is going to come with your banking stocks, because they're going to slow down because interest rates are dropping, but then your REITs kind of cover for them. So if you're a swinger, or something like that, then you can do that. I don't plan to sell out of any sector or anything, but just interesting how that works. Realty income, of course, it's a monthly payer. That's one of the best things about it, in my opinion. Great dividends, not the greatest dividend growth, but I think there's companies like, or ETFs like Vici, that do that better than realty income. But realty income is known, it's popular. I think it will be one of the long-term holdings in the portfolio. And with that, our total for Thursday's buys will be around $75.20. Fingers crossed it's a little bit less than this, so we have a little bit extra in the buying power for our recurring buys. So with that said, that's really the end of what I plan to be buying. And I just want to ask you guys this question: what stocks are you looking forward to buying this week? These are my plan to buys, and of course I'm very excited for them. So if you're planning to make an investment this week, just drop in the comment, what do you plan on buying? Maybe if you know to the number of shares or the dollar amount, just drop that. Curious to know. Leave that in the comment, and I will see you guys sometime soon. Thanks for watching. Peace.